Hello everyone, thank you so much for attending our webinar today, the 6 Trickiest Sales Tax States. I'm just going to give everybody a minute to keep filing in. It looks like we have quite a few attendees who are coming in, but I just wanted to give a quick hello, let you know that you are in the right spot. We've got a great presentation ahead of you, so I will jump back in about a minute or two. Hold tight. All right, hello everyone. We're back with you. Thank you so much for attending our webinar today. 6 Trickiest Sales Tax States, plus we threw in some runner-ups in with the mix as well. We've got a great presentation lined up for you today. We actually have Shane Radigan, Sales Tax Compliance Expert, and he's going to be talking about some very broad sales tax issues and how these particular states relate. Should be very informative, and I don't want to steal any of Shane's thunder or steal any of his time because we have a lot to cover today, so thank you so much for attending. But I want to go over a couple quick housekeeping items before we begin. The first is we will have a recording of this presentation as always. Just as a registrant, you will automatically receive a link to the recording as early as tomorrow. It takes a little bit of time for the file to process, so it could be Thursday as well, but I would expect probably on Wednesday. So if you miss any of today's presentation, no worries, you will receive a recording. If you would like to follow along with a PDF of the slides that you will see, you can do so. It's under Event Resources. If you look kind of to the left bottom portion of your screen, you just click that drop down, go ahead and click on the link, and that'll bring up a PDF of the slides. For any questions that you have, please send them my way, and I will do my best to answer the questions that I can during the presentation. But we will have a little bit of time at the end for Q&A with Shane to cover some of the questions that you have. We probably won't be able to get to everyone's question. It looks the last count is I think we had about 1,500 people registered, which is great. We love having so much interest and attendance in these presentations. I think that about covers it. One last thing, there is an option to listen to this presentation through your phone. If you look to the left at the console, there's a button that says Listen by Phone. You just go ahead and click that button, and you'll get a number to call in and a passcode. The only thing I ask is to make sure to keep your phone muted. It'll mute by default, but just keep it on mute, and we should have great audio. So without further ado, I'm not going to take any more of Shane's time. Shane, thanks so much for being here, and take it away.
Thank you, Morgan. Thank you all for attending. We'll get right through the material. My name is Shane. I work for Avalara. I'm not here to sell you on our particular solutions for sales tax. I'm fortunate to have the opportunity to be able to present on topics related to sales tax compliance, just from a thought leadership point of view. And I want to say I really appreciate the opportunity that Avalara gives me to do this. I spend my days in and out of sales tax rules and regulations, so this is kind of a break for me. Also, I'm not trying to absolve any responsibility here, but I will let you guys all know that this is not my slide deck, and there's some different schools of thoughts on slide decks, and you guys have listened to a lot of presentations in your lives if you're tax people and business people. I usually I try to go for brevity when it comes to my slides and do a lot more talking, and this deck has a lot of slides. So forgive me, I'm going to skip through them to a degree. You'll be able to, there's a lot of good material on them though. I mean, Morgan said, you guys can get a copy of them, you will get a copy of them. That's the benefit of having a lot of materials on these slides, is they're a better reference down the road. But I'm going to kind of skip through some of them, so I apologize ahead of time, and that's the last time I'm going to mention it. We're going to look at some kind of basic elements, because the context of sales tax compliance, there are some things that we all have to understand, before even we get to looking at individual states. I know that's why you guys are here today, and we will talk about some states that, that we judge that have a more complexity and some more difficult rules around things. But keep in mind that, the idea that the concepts around sales tax compliance, the big picture, meaning where are you, your company, is obligated to collect. It's that legal concept called nexus. It's still the kind of threat, not kind of, it is, guys, the threshold issue when it comes to developing a plan for sales tax compliance. And in plain old English, you got to know where you must collect first. That's kind of like your baseline, right? Once you have a deeper understanding of where you're obligated to collect, that's when the real compliance journey begins, in terms of determining how each of those individual states or jurisdictions where you are obligated to collect, how they treat the products and services you sell, what kind of filing obligations do you have, all that complexity. We'll talk about that stuff today. But we're going to talk a little bit about Nexus first, because I'm never going to give one of these presentations, guys, without talking about Nexus. It's critical to understand where your company is obligated to collect. We'll look at these states, and these states may present particular complexities in certain areas, and they do. That's why we're mentioning them today. But the underlying, or the threshold question for anyone who's trying to understand sales tax compliance, particularly a company that does have activities in more than one state, is the determination of where am I obligated to collect. It may be kind of a geographic crapshoot on what handful of states your smallest company may be obligated to collect in. You may determine, based on the activities that your company carries on, that there's no crapshoot at all, that you simply have an obligation to collect in many states, right? And Nexus is the analysis that your company in the states will make on the other side of the enforcement street, so to speak. They're going to determine your nexus position in relation to a given state. What does that really mean in just plain English? It means, where are you obligated to collect? In what states is the state have the ability to reach out and obligate your company, your firm, to collect? So this nexus analysis is critical. There's a lot of action in this area right now. There's all sorts of activities that your company can carry on in states besides the state where you're physically in existence. We take it for granted, and I think it's intuitive to most people, that the state where a company exists, where it's registered as a business, where it does its banking, where it pays its employees, you have an obligation in that state, unless it's a state without a sales tax, right? But everyone intuitively understands that physical connection, that physical existence, even if it is a virtual business that exists in somebody's garage, it exists physically through its registration, its bank accounts, its payroll, whatever kind of activity it's doing. That's Nexus. Those are the activities that occur in your home state that trigger the obligation to collect. And I think people just appreciate that without maybe thinking deeply about it. But I think it's good to understand it, because apply that same thought and that same analysis of activities to the other states that you're got activities in. And you say, what do you mean? It sounds circular. Well, here's a list of some of the activities that I mentioned. Activities is shorthand for stuff like this. Do you have salespeople? Do you have independent contractors? Do you maintain stock? Or are you a small e-com company that's using a fulfillment service, maybe run by big, huge outfit here in the U.S. that has locations all over the country, you might have stock all over the country. And once you've got physical property, your retail sales stock, for example, that's that's a nexus triggering activity. There's some here that are more esoteric. There are some that are more obvious. But these are what we're talking about. And I know you guys didn't come today to talk about nexus, but we've got to make sure that we cover this, that appreciating where and when you're obligated to collect is always the threshold question. Now, once you get out there, so to speak, once you realize that your company or your clients' companies have activities that may be triggering an obligation to collect in other states, you might start taking a closer look at the actual rules that those states have crafted around this nexus relationship. Hey, all the states are limited by Supreme Court cases, so none of this varies greatly from state to state, but the states have gotten more and more crafty, if you'll appreciate that term. I mean it with some respect. Some of these things are really quite amazing lawyering on the parts of the states to try to work around the existing Supreme Court boundaries of nexus, but to improve and increase the number of companies that are obligated to collect in their state. And what am I getting at? Well, it's really talking about creatively describing new types of activities which trigger your obligation. And I know you guys didn't come here for this today, but bear with me because it's important. Appreciate that. A lot of states now have click-through nexus. So if your company is doing advertising on websites with an underlying referral arrangement, you may have nexus in those states where those websites are served. States are finding more creative ways to look at affiliations, if there's any shared ownership, if there's any common registrations or common governance. The states now will assert that those two companies, although very separate, create a connection whereby a retail company from outside the state is now obligated to collect based on an affiliation with a company that's in the state, even if those companies have no relationship to one another in terms of their functionality. Keep it in mind, guys. That's the first question you got to ask. So here's what you came for. This is the top 6 stuff. Hey, if it was my deck, I'd probably have 4 out of these 6, and I might throw an Alabama in there. I might pull New Mexico out of there. But the point I'm making is not that this list is not a good one in any way. The point I'm making is it's in the eye of the beholder, right? But we have chosen a few states here to explore some of the kind of outlying difficulty states, right? These are when you're watching the high dives in the Summer Olympics, these are the states that require these are the dives that have the highest technical point value. They're the hardest to pull off. They may not always be the most graceful or beautiful dive to watch if you don't know much about diving, but this is where you really got to watch your P's and Q's, if you will. And these are a great sample of 6 states. I would throw Alabama in there as another home rule state. Home rule states, by the way, guys, there's 4 of them. Those are states that constitutionally allow local governments to not only collect a particular rate, like many states allow, but in these 4 states, they allow local governments to create and administer their own sales tax regime. So if you're operating in Colorado, Louisiana, Alabama, or Arizona, you are in a home rule state, and it's very likely that you'll have an obligation to file a return with a state agency as well as with an entirely separate local government agency. And you'll notice, it's a good time to mention it, that 3 of those 4 are on our list, and like I mentioned, if I had a 7th to put on here, it would be Alabama. The point to take away, guys, is that in these home rule states, the complexity is ratcheted up. The layers of enforcement are stacked on top of each other, if you will. You have different forms, occasionally different reporting methods. For example, some towns in some of these states still use a paper form. But the state is, in Alabama, for example, the state is mandatory electronic. So you do have this kind of inconsistency that can happen. None of it is insurmountable, but just be aware of it, and that's part of the reason why we're here today, is to learn this stuff. What happens when we talk about what are the complexities? These are kind of the rules of our little contest here to pick out the 6 most difficult states, if you will, right, guys? This is what we looked at. We said, are there a lot of rates in a given state? Are they one of the states that's more aggressively going after out-of-state vendors via more complex or more innovative, depending on your point of view, nexus rules? How do they tax services? This comes up more and more as there's a real sliding scale, guys, on the states. Some states are hardly taxing services at all. Other states, as you'll see today, one of them on our list taxes all services. So there's a real spectrum there. Sourcing rules, we'll touch on sourcing. This can get pretty convoluted in terms of the complexity of the facts and circumstances, but I'll try to hit some of the high points today just so you guys can appreciate when we use the term sourcing, what that means, and what it means is where do we choose the rules and the rates that apply to a given sale? Is it the location of the seller, or is it the location of the customer? Talk just a little bit about that. We'll look at one of our states on our list with some really complex sourcing rules, Illinois. And we won't spend a ton of time other than to give you guys, hopefully, an appreciation for what to look for, what to ask, whether you're operating in Illinois or even other states that may have similar, or at least on that sliding scale, slightly more complex rules when it comes to some of this stuff. We looked at exemptions. What are exemptions like in a given state? Some states are very plain and clear with what is exempted and what is not. What is the documentation required to support a given exemption? Other states are more complex. That's what we're going to use over and over today. But a state like California, which didn't make our list, but has many different exemptions and different forms, different calculations depending on the manner of the exemption. Is it for manufacturing? Is it for farm equipment? Is it for timber? Is it for resale, right? That's the most common exemption. So we looked at that stuff, and then we just looked at, hey, what just in general is driving the complexity. So let's look at sourcing rules. This is where we mentioned Illinois. And again, this is where my style of presenting starts to move a little bit away from this deck. You guys save this and you can read it, and it's great information. But suffice to say, if you're operating in Illinois, you need to be really careful about where you're sourcing your sales, meaning you've got to look closely at the rules as they apply to the transactions that your company is producing, is transacting. How's that? Meaning, just from a 10,000-foot view, for example, a sale made from a location in Illinois to a customer in Illinois will be sourced, meaning the rules and the rates enforced that will apply to that transaction will be at the location where the sale is made, at the retail store in many cases. However, if a sale is made into Illinois from outside Illinois by an Illinois registered vendor, the rules that apply will be the rules at the destination, at the customer's location. Illinois has gone deeply into determining where that location of sale is. This is where the complex rules start to, you really got to get, once you realize you're in a position to need to understand this stuff, then you need to go take a 3-hour webinar on Illinois sourcing rules. And I apologize, but to a degree it's true. The point today is to make sure you guys understand that this stuff is out there. Illinois has produced some pretty deep publications for businesses to determine just exactly where the sale occurs, where's the moment, the instant of sale for a sale made within Illinois by an Illinois vendor. It's not something you need to analyze at every sale, but if you're operating in Illinois and you want to get this right, you really need to take a hard look at what activities are happening at your shipping depot, at your retail store, at your call center, versus what activities are occurring at the location of the customer. If you have a service involved, if you've got installation, I can't give you all the answers today. Anybody who could tell you that they can give you the answers in a 5 or 10 minute spiel about this doesn't understand the complexity involved here. And if you do have those services involved, you need to look closely at how they're delivered, how the invoices look. And this is sourcing complexity. This is one of the things that makes Illinois hits our list. This is why it's on the list, right? And I apologize. I just have to double check here, guys. I don't want to miss anything important. Sourcing. There's your quick primer on what to look for. Now, there's the complexity of Illinois. What does the rest of the country look like? This is what I want to fill you guys in on. Well, there's, like as many things with tax compliance, there's a sliding scale amongst the states. Some of the states are strictly a destination-based basis. In fact, the majority of states are, meaning whether the order is shipped from inside the state or outside the state, whether the order is taken inside or outside, wherever the thing comes from, if the sale is destined to a customer within the borders of that state, that is the location where the rules that apply to that transaction come from, meaning what is taxable at what rate. It's destination-based sourcing. Remember, today we're talking about the outlier state. In this regard, Illinois is an outlier state. Complex sourcing rules still exist, though, in more than just Illinois. There are a handful of states that do employ some form of this origin basis sales tax for sales that are made within their borders. And if you're operating in those states, you got to be aware of the types of questions you need to ask about the transactions that are happening, and also, how you're invoicing. And it isn't always a question, frankly, you guys, of absolute correct or absolute wrong. It a lot of times is about consistency, about doing your homework and understanding the situation that you find yourself in, taking a rational approach, applying some good rules to your system, to your processes, and going for it. So awareness is so key, and understanding the need to appreciate what these rules mean. So if you're in Illinois, it's a big deal. If you're in Ohio, it's a big deal. Some of these states still use an origin basis for some transactions, and that's how it works. And Illinois is kind of the worst one of the bunch. So there you go. There's my spiel on sourcing. Let's talk about a gross receipts tax. This in a few states, guys, what we're getting at here is some states don't really have a sales tax at all. It's actually a gross receipts tax. It changes the accounting. It changes the way the method by which your form flows. For many practical purposes, however, though, for what the customer sees, there's really no difference, right? One thing we do notice in gross receipts tax states oftentimes is a much broader tax base, meaning that in Arizona is a great example. New Mexico also has one. It's a tax, at least theoretically, on a gross revenue. So these states, we generally think of as the type of states that tax a lot of services. The default approach in these states to all retail transactions is they're taxable without a specific exemption. In your sales tax states, the majority of states, you really see things kind of working the other direction. At least especially on the services side, services are not taxable unless a state specifically identifies them as such. These gross receipts tax states, they really turn that on its head. Reporting, a lot of differences there. As far as how the fundamental process works in the eyes of the consumer, and frankly, and probably in the eyes of your process software on the ground, we're still applying rules and rates and geographic boundaries to particular transactions and coming up with an appropriate tax amount. Getting it on the returns is never easy. And this is something you do see more so in the gross receipts tax states because it relates to their extensive taxation of services. A lot of codification and categorization of particular types of services. Occasionally you'll see different rates applied, not too often, but once in a great while. Not unlike a business and occupations tax, like we have here in Washington. So there's, on the reporting side, definitely more complexity. New Mexico, this is part of the slide deck, guys, that I'm going through quickly. I think this is good material. This is really just a taxability chart here for New Mexico. It relates to that point I was making, and that is like gross receipts tax in New Mexico applies to everything, right? Our deck there includes refuse collection, sewage services. I mean, even in a state like Washington that I'm in with no personal income tax, you know, a state like Washington relies heavily on its sales tax revenue. Yeah, no sales tax on sewage services that I'm aware of, and I don't think I'm paying sales tax on my garbage either. So even in these gross receipts tax states, you know, you see a lot broader tax base, particularly in the area of services. You do see here also more complexity in the gross receipts tax states when it comes to particular exemptions, but also rates. You'll see different rates applied. In many ways, from a compliance point of view, it's really a mismatch, a combination of a business and occupations, like we call it in Washington, a business activities tax, and a sales tax. And if you're just a retailer sitting there trying to do your thing in 45 other states in D.C., it just adds more. It's a different language. It's actually more like a different dialect. How's that? It's the same language, but it's like talking to somebody from the other corner of the country. You know, you're talking the same language, but you're not always getting all the detail. And that's the point about New Mexico, Arizona, some of these gross receipts tax states is it's not a sales tax, and you really just got to watch your details when it comes to forming your compliance processes. We're shifting gears a little bit. This is really important. This relates to what I mentioned earlier, guys, about these home rule states. Louisiana is a great example. Louisiana allows the local parishes to conduct their own sales tax administration. So, you know, like in many states, rates can vary from address to address. That's part of the big complexity of sales tax. But in these states, and Louisiana is a great example, it can also be what is taxable and what is not can vary from parish to parish. What form, what exemption might apply, because each of these local government entities in these home rule states is the sales tax administration authority for that jurisdiction. They make the rules. They produce the forms. They audit. So this is an area of great complexity when you guys, particularly if you haven't operated in one of these states before. There's a lot of traps for the unwary. You know, there's some details here which are interesting, but the broader point is, you know, this is really in these home rule states, it's its own, each jurisdiction, and Louisiana happens to be the parishes, is its own little kingdom. And you need to be aware of the ins and outs necessary to comply with each of those little kingdoms. Well, some of them not so little, right? Remember, it's Colorado, Arizona, Louisiana, and Alabama that constitutionally allow for this. Now, of all the other states, like many times, it's a sliding scale of what kind of local complexity there is. In some states, guys, it's the same rate applies in the whole state. The same rules apply in the whole state. There is no, except for perhaps reporting purposes that I really can't even think of in a few states, there is no reporting of any geographic information. Okay? Slide a little bit down that spectrum, not too far. And most states are allowing localities to set their own rates. This is the common scenario, right? Here in Washington and in most majority of states, the rate here varies from city to city, from transit authority district, county lines, and that's the more common scenario. And these four states here, these four home rule states, they're at the vast other end of that spectrum. Each locality within those states, at least many of them, Arizona is only just some of the communities in Arizona, but in all four states you have at least some communities in the state that are able to run their own sales tax show, and you need to be compliant. That's the big message. Colorado, here we go. I mean, these slides are they're packed with info. And this is exactly the kind of stuff that we want you guys to understand about local collection. They don't have the same rates. They don't tax the same things. They don't use the same ordinances. They don't even sometimes use the same method of publishing and applying these rules, right? So just be aware. And that's hopefully what you guys are here for, right? This is the stuff that makes these states terribly complex from an administrative process point of view. You know, there's just a lot of little entities in there that you're going to need to take care of. Yeah, licensing. Gosh, I didn't mention that. Yeah, in many of these localities, you need to have your own local license. Alabama for sure. Missouri's on here. These guys are not a home rule state, but on that spectrum that I mentioned, Missouri is the one just below the home rule state when it comes to complexity of jurisdictions. Anyone who has done any compliance work in the greater St. Louis area can attest to this. It's really, really complex in terms of the jurisdictions that have been cut and pasted over one another, how that gets reported, the different food rates that can apply if you happen to be in the food or hospitality business. You know, it gets really complex in a hurry. It's not a situation where each local community in Missouri is its own home rule. We're not quite there, but we are at a point where the state allows really, really deep complexity when it comes to number and volume of jurisdictions, overlaying one another, interacting with one another in terms of destination and origin, and determining the proper rate to apply to a given transaction. And yeah, here's just a couple of calcs here, and I'm not certain. You know, just I think other than this is just a great example, guys, for you guys to see that. I assume this is probably pretty darn close to each other. We've got a rate there of 3% on sales tax, and probably within, I would assume, within an area really close to one another. And I apologize, they're not my materials. So, honorable mentions, yeah, Texas is right up there with Missouri. A lot of complexity, a lot of local jurisdictions, different rates. Texas has a very convoluted calculation algorithm. Yes, algorithm. If you're selling from within Texas to a location in Texas, has to do with whether or not you have activity in the destination. You can have a calc that includes some of the destination, some of the origin. Florida has a few rates. I wouldn't necessarily call them the most complex ever. South Dakota definitely has some really wild and difficult specific rates when it comes to, or specific compliance challenges when it comes to construction, things like that. Tax rates, yeah, I mean, all you got to do is take a good look, at the Avalera website. We talk about this a lot because it's kind of one of the first things that for years we've tried to get across, and I think we're doing better at it. And zip codes are not effective. They were never designed for political boundaries in mind, right? Zip codes are designed to provide efficient delivery of the mail. And they are not a good way to determine. Now, there's still a lot of folks that are using sales tax, zip codes as their compliance basis. And frankly, prior to the wave of technology that we've all been able to harness, including the state auditors, by the way, that's occurred in the last 10 years. I don't mean Avalera, I just mean Google Maps, GIS. Technology that now, gosh, even the smallest towns occasionally and all the big towns have GIS departments, Geographic Information Services, right? We've digitized these maps, satellite photos. Hey, prior to all this, a zip code, and this is part of the reason why I think that zip codes still prevail as a potential solution for folks, is because for a long time, that really probably was the best way to get the right count. And that was the information that was available to folks. But it's not just the industry. The same information is now available to the revenue authorities. You really got to get this right. And Zip codes are just not enough anymore. And so the ability now to really pin an address and determine just what jurisdictions it lies in is out there, and it's attainable. And the revenue authorities are expecting you to get it right. And that's what I'll tell you about zip codes, and that's the truth. Here's a map. This is a map in Colorado. We're gonna refer to Colorado a lot when we're looking at complexity today, guys. This is Denver area, I think. Yeah, close by. There's your different rates broken out by jurisdictional boundary, and you can see the overlay of the zip codes. Now this is certainly an extreme case of this, guys, but the point is well made. Only occasionally do you see that the zip code boundary lies as the same boundary as a sales tax boundary. Best assumption is that's some sort of political boundary that both systems are using to determine the edge of their boundary. However, you can see all over the place that the zip code boundary is just not making any sense. In other words, you're really kind of crap shooting, and in a place like Colorado here, we're ranging from 4.25% to 7.5%. So it's a 3% swing, and that can be real money in a hurry, right? That cool little slide there is showing all the little pieces that may be collected within that zip code. They're not all collected on one transaction, no. They're not all on one, but depending on where you stick that pin, which one of those colors you get, you're going to get some combination of these jurisdictions here. And the point again is to reinforce that looking at a zip code boundary is a really poor way of trying to determine what you need to calc on a given. Yeah, it's risky. That's pretty fair. I'll say that. Yeah, not tied to zip code. Right, counties and municipalities can set their own rates. They can vary greatly. Yeah, this is awesome. There you go. I'd say blunt instrument, zip code as a blunt instrument is pretty fair. And I think the lower to a false sense of security, that is legitimate, and I think that does come from momentum of prior solutions and prior understanding of what it takes to comply with sales tax. My father was a sales tax auditor for the state of New York for his entire career. So I've had plenty of talks around the dinner table at some point in my life, long time ago, about sales tax. And, just appreciate, the reason I bring that up is, appreciate that as we see these tools become available. I'll mention it again, and this relates to the old man. The state is well aware of these tools as well, and you're expected to be able to pull this off. And quite frankly, telling an auditor, good luck telling an auditor, hey, we've done it this way for 25 years and we've never had a problem. We've been using zip codes. What's the deal? Chances are you're not going to have much luck. You're not going to be in a position of much strength. So there you go. Yeah, we really nailed this in here. Okay, and that's a good thing. All that zip code thing is a big deal because it's still out there as kind of a legitimate solution, and frankly, it's just not anymore. Nexus rules, yeah, we talked about this. I opened up with Nexus, my favorite topic, and this relates to right, Brawny and Nexus. Right, we had this earlier. Okay. Also, and I'll mention this, you guys. Gosh, this is a review of what we went across before, so I'm glad it's here, and I'm glad it's part of your materials. This is related to the marketplace fairness, you guys. I know you're here for the kind of the state stuff, and we've been through some of it, most of it, I guess now. But back to this Nexus thing, when you do read about marketplace fairness, this is the federal government's attempt to try to obligate out-of-state sellers to collect. It is not an internet sales tax. We hear that all the time, right? It's a tax on sales made across state lines by any means. It's not a tax on internet services. It's not a tax on things only sold over the internet. Nexus, altering Nexus or opening up and expanding the ability of states to reach across state lines and obligate sellers to collect, embodied in marketplace fairness, embodied in these rules promulgated by states, this desire by the states to find a way to obligate out-of-state vendors to collect on sales made within their own borders, within the state's borders. This is not limited to sales made over the internet. And that's a common misinterpretation I hear and see when I read a lot of articles. So I want you guys to be able to know that it's a little bit broader than that. It's a big deal. And as these states are doing their best to alter it, occasionally one of them will have fantastic success. A state will be able, New York 3 or 4 years ago created that click-through nexus I mentioned to you guys earlier. It went to the highest state court, Court of Appeals in New York. The Court of Appeals blessed it. The folks that hated it brought it to the U.S. Supreme Court, and the U.S. Supreme Court refused to hear it. Well, I'll refer you to Schoolhouse Rock. If the highest court of state says it's okay law, and the U.S. Supreme Court says we refuse to hear a case on it, it's good law. And having completed that and done and accomplished that, if you will, depending on your point of view, New York became a leader. Well, guess what's happened now? We're up to 14 or 15 states that have essentially cut and pasted New York's law on their books. And I'm in one of them. Washington just created its own click-through nexus law, which was effective December 1st, 2015. Nevada did the same thing right at the same time. Michigan just did it, made a big deal about it. So what happens is these states find a unique or an interesting way to establish nexus. They get the courts to bless it. And then it's really up to the revenue authorities to start enforcing it. And for you guys as vendors, as people operating out there trying to comply, it's up to you to be aware of it, right? And that's what you're here for. I hope today was a little bit helpful on that nexus deal. Okay, we're back to complexity about states. Forgive my digression there on nexus, but it's just a really important thing to think about. So services, mentioned that earlier. We talked about gross receipts tax states where services are much more broadly taxed. It's something to be aware of. I mean, obviously, if you're not selling services, it's maybe not something you care about. But if you're purchasing services in those states someday, it may be something you care about on a use tax compliance situation. But let's talk about other states that are not necessarily the gross receipts tax state that is taxing services extensively, but what is happening in states like Washington, where traditionally the sales tax applied to sales of tangible personal property. And our acronym here is TPP. And think about the context of when most sales tax laws were developed and created in the U.S. was around the time of, the decade at least that followed, most of them the decade that followed the Great Depression. Not the one in 2008, the one in 1930 or so. And you'll see that many of these laws and rules, the original sales taxes, were written at a time when most commerce was done through tangible goods. And all you got to do is look at any kind of government survey or a decent blog post of a good financial reporting outlet, and you can see that the amount and fraction of purchases that we make in the U.S. and around the developed world on services is a much bigger portion of our income than it's ever been before. And the states are slowly, quickly as they can in some cases, bureaucratically, catching up. And you do see, as a general principle, without a doubt, the movement is for more and more taxation of services. And I don't mean just lawn mowing and fixing roofs. I mean software implementation, training services, in some cases professional services, consulting. Never gets called out specifically, but you look in some states and the products of a typical consultant are, in many cases, taxable services under state rules, whether it's data processing, access to software, manipulation of process through some sort of automation. My point is that, appreciate that when we use the term services, the states aren't just applying taxes to services that have been around forever. The states are finding new services and defining them and taxing them, right? They're looking closely at what industries are happening, right? Where is money being spent by businesses for use tax purposes and by individuals and consumers? You see in Chicago, they just applied their amusement tax, which was written in like the 30s, guys, to cover 1930s, to cover like admissions to a fight, like a title fight, Well, they've now stretched that amusement tax to include Netflix. They determined through a ruling in Chicago that Netflix is a taxable service in Chicago. Well, that takes some really good lawyering, and no matter what you think of it, at least creative lawyering, how's that? No matter what you think of it, that's just a great harbinger of things to come. And that's the message today. Keep an eye out for not only the states we mentioned that extensively tax services, but keep in mind that there are many states that are on the slow crawl and occasionally pretty fast crawl towards taxing more and more services that you may or may not provide. Or frankly, guys, if you're working for a tax department of a decent-sized business that buys a lot of software and buys training and buys implementation services, you got a use tax situation as well. And that's what I want you guys, that's the takeaway I hope you get from today. When you're looking at services, you got to look at these categories. Like many things in sales tax, the work happens before you even open up a Google search of the state you're operating in. And what happens, first is you got to determine where you're obligated to collect, and you got to determine what you sell. And I'm chuckling because I know many of you are saying, I don't need to know what I sell it every day. But I chuckle because what I mean is from a sales tax point of view, you got to know what you're selling. And if it's services, you got to know what language to use when you're describing those services for sales tax purposes. If you're selling software, same thing. If you're selling widgets, if you're selling doodads, you got to know exactly how the states you're operating in view those things before you can look and to see what the treatment is. And the information's out there. We're here to help. There's a lot of professionals out there that are there to help. But it's true. If you think about what needs to be done with sales tax, there's a lot of work to do first, which then makes the research and the setting up process a lot easier. And this is one of them. Knowing what you sell, understanding what states you're operating in, what kind of complexities you might see. This is part of what hopefully you're learning today, that these states are all over the map, literally and figuratively, and have different ways to make your life difficult when it comes to sales tax compliance. And all I can do is try to tell you about them today, and hopefully you'll recall someday. You got some work to do. Yeah, sourcing, this is a takeaway on sourcing. What I mentioned about Illinois, there's like a 5-step test to determine even exactly where a sale takes place for sales tax purposes, you guys. So, appreciate where the negotiations occur, where a sale is approved, where a contract is signed, where a customer is standing the moment that money changes hands, whatever it is. States can view these moments in time differently on when a sale occurs. And you think from a business point of view, who cares? And no one cares from a business point of view about these details, unless you're a contract lawyer, except for the sales tax guy, because it can really matter on where rules apply in a given transaction, for example. Is it origin, is it destination? Do we apply the tax at the point where the customer is? Do we apply the tax in force at the place where the vendor is? Do we apply the tax in a third place, depending on where risk of loss transferred to the items that are sold? The point here is, keep in mind it's out there. The complexity is there. You got to know, you got to know where you're operating and how it operates. These are great slides. Morgan, I'm going to ask you if you have any questions you'd like to pop in here. I don't mean to burn through these guys, but it's just a ton of really good info. But I don't think I need to read them to you. I'm glad you're getting copies of them. You got any questions, Morgan?
Oh, we've got quite a few questions coming through. Let me go ahead and pull them up. The first question that came through, and I think I may actually know the answer, but I'm going to let you verify it. But somebody asked, the 4-digit extension on a zip code, does that provide a more accurate rate than just the standard 5-digit zip code, or is it basically it's the same?
From a sales tax compliance, getting the right rate point of view, it's the same. The 4 digits helps us, or helps anybody who's trying to, what we call, verify an address. In other words, it helps GIS put a pin in that address and determine what zip code it belongs in. So in terms of precision, it's more precise. In terms of telling you what rate applies at a given address, it doesn't provide any additional information besides the 5-digit code. So it's a little of both. It doesn't make it any more likely that you're going to get the right rate. It makes it more likely that you're going to get the right, your mail's going to arrive there quicker. And that's about as far as I'm going to go because I'm not a GIS expert. But it has to do with precision. It doesn't have anything to do with sales tax boundaries.
Okay, excellent. Another person wrote in, from an audit perspective, let's say somebody, is being audited. If you're showing on your end, putting forth your best effort, you're trying to get the correct sales tax calculations in your records, but are still making mistakes. At what point does an auditor typically offer leniency, or is it really it's correct or it's not correct, and no leniency? What's your opinion on that?
That's an unanswerable question, but I think I can put some context around it, right? Because we're talking about the heart of an auditor, and we don't know if we have any on the call today, so we'll be extremely kind. Diplomatic, of course, but we're talking about the dark heart of an auditor. I think seriously, and I alluded to this earlier, consistency of process is really important. Here's what I would say. If you don't do those things, you're never going to get any leniency. How's that? And that I think is a pretty hard and fast rule. In other words, no one knows what it might buy you. My experience is, if you're earnest and you've got process and you've got records that back up, and when I say by records, I mean I really do mean like notes or whatever it is at a moment in time when you make a determination in your company that our widgets are exempt in Wisconsin based on this. Pop in an envelope somewhere, save it as a digital file. No guarantee that it gets you anywhere, but I would say, I would all but guarantee that if you don't show consistency, show some earnest attempt, you're never going to get leniency. So I hope by answering the negative, I hope I provided a little context there. I did allude to that, and I do stand by it, but I just don't think there's any hard and fast rule to it. Other than if you do have a flaky process, you don't count on any leniency. I mean that's low hanging fruit for an auditor. When they walk in there and you're not quite sure why things are the way they are in your sales tax compliance, and they're wrong. That's just an easy assessment for an auditor. All
right, excellent. So here's another question. This is getting back to Nexus. So this person writes, does Nexus apply only to a subsidiary or to a whole legal entity?
That is a great question, and that relates to what we talked about when we talked about states' fairly recent attempts through many different avenues within the context of Supreme Court cases that kind of provide the outer boundary of nexus. And one of them is this concept of affiliate nexus. And I don't mean affiliate sellers in Amazon. That's something different. I mean affiliations. I mentioned earlier when we talk about common ownership, things like that. Many states have passed regulations, and there is a Supreme Court case on this, National Geographic from the mid-'70s, that says common ownership, you don't need to have shared functions, you don't need to have shared purpose, you don't even have to have shared governance, but as long as there's a shared ownership. Now, that to me would include a subsidiary parent relationship. So what I'm getting at is, yes, there are states out there right now, Texas comes to mind, that without looking at the facts and circumstances of a given arrangement, yes, they would assert that nexus applies to an entire entity. Now, they may assert it, and you may be able to defend it, but you will find more than just a handful of states now, and again, this is part of that copycat phenomenon that happens, where the states look at this and they say, hey, yeah, why not? It worked here, it worked there, let's try it. You will see states have more and more have regulations on the books that refer to exactly that situation. And what they're shooting for is every entity that has any ownership connection to the entity that is within the state. So I think the answer to the question is yeah. At least the more aggressive states are looking to shoot for the whole entity. Yep, it's really important. It's sales tax planning is something that's on your plate. You need to be aware of how strongly the rules are in the states you're operating, and frankly, you need to know how fervently the states are going after those types of affiliations when it comes to nexus. I think it's important to know ahead of time. That's for sure. It's a great question.
Okay. Next question. I have a feeling the answer will begin with a sigh. But one person wrote in, based on the immense complexity of sales tax over state lines, and particularly online, why hasn't the federal government taken a deeper role in fixing this?
Well, what's gone on in D.C. for, better part of a little over a decade now, is an attempt to do just that. The way they do it, guys, is marketplace fairness, or the current version of it is called the Retail Transaction Parity Act. The closest this came to becoming law was in 2013. The Senate passed it. The House did not. The feds go at it, guys, is through Nexus, and that's how marketplace fairness works. That's how the feds, through the Congress, have attempted to do it. Why haven't they? You can't herd the cats, I'm not here to talk politics, but anybody who follows it at all knows that, U.S. Congress is not really put together a whole lot of agreement on much of anything in the last decade or two. And this is a perfect example of it. I will bring up real quickly, next time you're at a cocktail party and you're really straining for something to talk about, look for the Supreme Court to agree to a case here, I'd say this term or next term, where they're going to revisit Quill. And it may be the Supreme Court that fixes this for everybody, like it or not, and while the Congress kind of dilly-dallies around. So the biggest reason is politics, and that's not a bad thing, but that's why. The solution has been kicking around really for a couple decades, and at least the solution that tax policy folks think is the most appropriate and equitable, and that is obligate sellers to collect taxes on the location where their sales occur, while providing a small seller exemption. That's the basic framework of marketplace fairness, and the only reason that it hasn't passed is because there's reasonable people disagree on how to do it and whether it should be done. I will just remind you again, look out for the Supreme Court. They may just kind of turn the whole apple cart on its side here in the next couple of years, and it sounds as though the direction they would go would be towards a more universal collection model, where people would be obligated to collect all over the country.
Awesome. Well, hey, I think we've got time for one more question here. This one's pretty interesting. Somebody wrote in, is there a list of states that vary with rates within a state? So, you brought up a couple examples of, Colorado, for example, and then, some of the other states that made the list in their complexity. Do you know of any, single source or a list that says, hey, here are all the states that have various tax rates within that state? Could it be all 50?
Well, not all 50. Let's count them back, right, guys? Because there's 45 states plus DC, yeah. Not to be too much of a homer, but I know that information is on the blog, on the Avalere blog. We got an awesome blog. We have a lady who writes all the time for the blog. That's her only job. She does a great job. You can go in there and organize it by state. I guarantee that info is right there. I'd say off the top of my head, it's like a half dozen states that have a single rate. I'm pretty close, I think, guys. Jersey comes to mind, and I apologize, but that I think is roughly speaking. So yeah, I think of the sales tax jurisdictions, you're talking 40 or 41. That at the very least, has separate, different rates that apply based on jurisdictions within the state. And don't hold me to those numbers, but I think I'm pretty close, guys. So the vast majority of states require some geographic, or I don't know if they require, but they, in order to calculate appropriately, you need to understand the local tax implications, the boundaries. Most of them.
All right, excellent. Thank you so much, Shane. That puts us up at the top of the hour, and really appreciate you ending a little bit early so you can answer, address a lot of the questions. I'm sorry to everybody on the line who sent in questions that we weren't able to get through, but I do welcome you to reach out to us, absolutely, and we would be happy to discuss these issues further. I also just want to take a quick moment here to point out an event that we have coming up, especially for anybody who's interested in CPE credit. We have a lot of presentations. We have an event called Crush 2016, and it's in New Orleans on May 10th and 11th. And over 70 hours of interactive CPE credit presentations, a lot of networking, one-on-one with peers, industry leaders. It's a great event, and we would love to have you attend. The link to register is actually on the PDF of the slides. So under Event Resources, if you download the PDF of today's slides, there is a registration link there. And I just wanted to thank Shane again. That was an awesome presentation, and we'll be reaching out, and I look forward to everybody to attending our next presentation. We'll be in touch. Thanks.
Thanks, Morgan. Thank you, everybody.